What if the biggest threat to Bitcoin right now is not regulation, not interest rates, but a geopolitical war thousands of miles away? In the past 48 hours, the crypto market has suddenly turned red. Bitcoin has slipped below $68,000. Ethereum has fallen under the $2,000 mark, and major altcoins like XRP, Solana, Cardano, and Dogecoin are all dropping between 3 and 5%. But this sell-off isn't happening in isolation. Behind the scenes, global tensions are escalating between the United States and Iran. Oil sanctions, political warnings, and military rhetoric are creating uncertainty across global markets. And whenever uncertainty rises, investors tend to reduce risk. So the real question now is this: is this just a temporary correction, or could Bitcoin actually fall all the way toward $55,000? Today, we break down exactly what's happening, why crypto markets are reacting so strongly to geopolitics, and what analysts believe could happen next. The sudden crypto market drop. Over the past several weeks, Bitcoin had been showing strong momentum. The price climbed above $70,000 and even tested the $74,000 level. Many investors believed a new bullish breakout was forming, but markets rarely move in a straight line, and in the last 24 hours, sentiment changed rapidly. Bitcoin suddenly dropped below $68,000. At the same time, the broader crypto market followed the decline. Ethereum fell roughly 4% and slipped below the $2,000 mark. XRP hovered near $1.37. Meanwhile, Solana, Cardano, and Dogecoin also declined between 3 and 5%. When this type of synchronized decline happens across multiple assets, it usually indicates a broader shift in investor sentiment. And this time, the catalyst appears to be geopolitical risk. Rising tensions between the US and Iran. Global markets are extremely sensitive to geopolitical instability. When tensions rise between major countries, investors often reduce exposure to risk assets. Right now, tensions between the United States and Iran are increasing again. According to statements from officials, the United States is considering stronger actions aimed at reducing Iran's oil revenues. Iran relies heavily on oil exports as its primary economic resource. Limiting those exports would significantly impact the country's economy. The proposal reportedly focuses on restricting Iran's ability to sell oil internationally. Officials say the goal is to prevent revenue from being used to support military organizations, including the Islamic Revolutionary Corps. But Iran has made it clear that it will not easily accept these restrictions. Iranian President Masoud Pezeshkian recently rejected demands related to these policies and stated that Iran would not surrender to external pressure. These strong statements from both sides have increased fears that escalation could further. And whenever the possibility of escalation appears, financial markets tend to react quickly. The role of oil in global markets. Oil is one of the most important commodities in the global economy. Changes in oil supply can influence inflation, interest rates, and overall economic stability. If tensions disrupt oil production or transportation, prices can rise rapidly. Higher oil prices can increase inflation, and when inflation rises, central banks often respond by tightening financial conditions. This is one reason why geopolitical tensions often impact markets beyond just the countries involved. Investors start to anticipate ripple effects across the global economy. Those ripple effects can influence stocks, bonds, commodities, and cryptocurrencies. Why crypto markets react to global events. Some people still believe that cryptocurrencies exist completely outside traditional markets, but the reality is more complex. Crypto has increasingly become connected to global financial systems. Institutional investors, hedge funds, and large asset managers now participate heavily in crypto markets. These institutions manage risk carefully. When global uncertainty rises, they often rebalance portfolios and reduce exposure to volatile assets, and cryptocurrencies are still considered high-risk investments.
So when geopolitical tensions rise, capital often flows out of crypto temporarily. This does not necessarily mean long-term bearish trends, but it can create short-term sell-offs. Bitcoin's technical picture. From a technical perspective, analysts are closely watching Bitcoin's chart patterns. Crypto trader Captain Fibik recently highlighted a formation developing on the 8-hour chart. After the recent decline, Bitcoin has been moving within an upward-sloping channel. This type of pattern can sometimes represent what analysts call a bearish flag. A bearish flag usually appears after a sharp downward move. The price then consolidates within a narrow upward channel before potentially continuing downward. If Bitcoin breaks below the lower boundary of this channel with strong trading volume, it could confirm the bearish continuation pattern. According to this analysis, the next major downside target could sit near the $55,000 level. However, technical patterns are probabilities, not guarantees. Markets often invalidate patterns if new information changes investor sentiment. Altcoins under pressure. While Bitcoin often leads market movements, altcoins usually experience larger percentage swings. That pattern is visible again in this recent decline. Ethereum's drop below $2,000 has attracted significant attention. Ethereum remains the largest smart contract platform and plays a major role in decentralized finance and blockchain applications. But during periods of risk aversion, investors often shift towards safer assets. Within the crypto market, Bitcoin is generally seen as the most established asset. As a result, altcoins can experience stronger declines when sentiment weakens. XRP, Solana, Cardano, and Dogecoin have all moved lower as investors reassess risk exposure. Investor psychology during geopolitical events. Financial markets are driven not only by fundamentals, but also by psychology. When uncertainty increases, fear tends to spread quickly among investors. Even rumors or headlines can influence trading decisions. News about military tensions, sanctions, or diplomatic conflicts can trigger immediate reactions. In many cases, investors sell first and analyze later. This phenomenon is often described as risk-off sentiment. During risk-off periods, investors reduce exposure to volatile assets and move towards safer investments. Traditionally, that means assets like government bonds or gold. But in recent years, Bitcoin has begun attracting attention as a potential hedge against instability. This dual identity sometimes creates conflicting reactions in the market. Some investors treat Bitcoin as a risk asset. Others view it as a long-term store of value. Could Bitcoin actually drop to $55,000? The possibility of Bitcoin dropping to $55,000 depends on several factors. First is the geopolitical situation. If tensions between the United States and Iran continue escalating, risk sentiment could remain weak. Second is macroeconomic conditions. Interest rates, inflation expectations, and liquidity conditions all influence investor behavior. Third is market structure. Large liquidations, leveraged positions, and derivatives markets can amplify price movements. If Bitcoin loses key support levels and selling pressure increases, the $55,000 target could become possible. But markets rarely move in straight lines. Even during corrections, sharp rebounds can occur. What analysts are watching next? Several indicators will likely determine the next direction for crypto markets. The first is geopolitical developments. If diplomatic negotiations reduce tensions, markets could stabilize quickly. The second factor is institutional activity.
Large investors entering the market often create strong support for price. The third factor is technical levels. Bitcoin's ability to reclaim the $70,000 level would likely restore bullish momentum, but failure to hold current support levels could trigger additional volatility. The bigger picture. Despite short-term fluctuations, many analysts believe the long-term crypto narrative remains intact. Blockchain adoption continues growing, institutional interest is expanding, and digital assets are increasingly integrated into global finance. Short-term corrections often occur during long-term growth cycles. The crypto market has experienced multiple periods of volatility throughout its history. Yet each cycle has also introduced new participants, new technology, and broader adoption. Right now, the crypto market is facing a combination of geopolitical tension and investor uncertainty. Bitcoin's drop below $68,000 has raised concerns about further downside. At the same time, altcoins are experiencing broader declines as risk appetite falls. But markets are constantly evolving, and the next move will depend on how global events unfold. If tensions ease, sentiment could quickly improve, but if uncertainty continues rising, volatility may remain high. For investors, this moment highlights an important reality. Crypto markets are no longer isolated from the world. They are increasingly connected to global politics, economics, and financial systems. And that means the future of Bitcoin may sometimes be shaped far beyond the crypto industry itself.